Hello, everybody, and welcome to today's webinar here at Dentons, Global Trade Disruption, Legal and Supply Chain Implications. Well, we're delighted that you can join us here today. My name's Daniel Lund, and I'm the Global Head of the Trade Practice here at Dentons. Now, recent geopolitical and macroeconomic shifts are quickly changing how global trade and supply chains operate, with real commercial consequences for businesses. Today's session is therefore designed to help you make sense of what's changing, where risk is emerging, and what this means in practice for you and your legal teams. As always, these sessions are very much intended to be interactive, and I encourage you to make full use of the Q&A functions as we go, and we'll also be running some polls throughout the session so that we get your feedback on the key themes that you're seeing in your areas. Now, what are we going to talk about today? First of all, we're going to be having a policy-led discussion in terms of what are the key themes we're seeing at a macro level, how these themes are then turning into trade policy, and also hard regulations that are going to impact global trade for the foreseeable few months. We're then going to focus on a particular regional perspective, focusing on the Middle East, seeing how the commercial, cultural, and business factors are implemented and also affecting commerce on the ground. We're then going to move onto the practical legal nuts and bolts in terms of how contractual interpretation and commercial practicalities are being played through as international trade continues to be disrupted. We're going to finally finish off the session today with an interactive Q&A session where we'll be unpacking some of the questions that we've received from yourselves as part of the session as it's gone on, and also hear from our panelists in terms of key topics that General Counsel need to consider as we move forward. So with that being said, I'd like to briefly hand over to our speakers who will introduce themselves. So Louisa, perhaps if you could say a quick hello to everybody.
Thanks, Daniel. So my name is Louisa Caswell, and I'm a litigation partner in the London office of Dentons, and I primarily focus on contractual disputes and all sorts of product litigation.
Fantastic. Steve?
Everyone, Steve Knight. I head up the banking and finance team for Dentons in the region in the Middle East.
Great. Dean?
Good morning, good afternoon, everyone. My name is Dean Rogan. I am managing partner of our Dubai office, where I've been based since 2010, and I also head our Middle East construction and dispute resolution practice.
Fantastic. And last but by no means least, Mike.
Good morning and afternoon, everybody. Mike Zolans. I head up our U.S. public policy, regulatory, and government affairs practice, focus in the area of trade compliance and is part of the U.S. trade team.
Great. Now, before we dive into the substance of the session, we're going to have Neve just carry on and kick off the first poll of today. So Neve, over to you to launch the first poll, please.
Thanks, Dan. So we are really keen, as always, to get your input and views on this topic today. Our first question for you is, what is your organisation's primary focus in response to the current disruption? So you should see the poll question on your screens now. Is it perhaps managing supply chain continuity that's top of your agenda? Perhaps it's reviewing contractual exposure. It could be monitoring sanctions and regulatory risk. Perhaps it's assessing the financial and liquidity impact, or perhaps you and your leadership team are taking a wait and see approach. So we'd really love your views and input on this one. It's great to see so many people already getting involved. So we're just after passing the 60% mark. We're going to leave another few seconds just for you all to indicate the option that feels most like your organization's focus right now. So let's do a 5, 4, 3, 2, 1. On this one, I'm keeping everyone on their toes, getting them to quickly give us a benchmark here. So Dan, we've lots of responses for you all. We're going to end the poll. Loads of people still voting, and share the results with you all now. So hopefully this will provide some value in terms of benchmarking what other in-house legal teams are doing and focused on right now. Okay, Dan, so it is really quite tied here. So we have quite a chunk of the audience, 36%, focused on managing supply chain continuity, and that's balanced actually with monitoring sanctions and regulatory risks. So they're the two at the top. So the second of those at 31%. So that brings us up to obviously almost the 70% mark in terms of the focus of the majority of the audience. So back to you.
Thanks, Niamh. And I can promise everyone on the call that this was not fixed, but this was an excellent segue into the first session today. Mike, who's going to talk us through the big picture trade policy themes and take that down into the practical regulatory consequences. So without further ado, Mike, over to you.
Great, and thanks, Dan. And interestingly enough, as Dan noted, although not rigged, kind of the two big thoughts here on where we find ourselves really are reflected in the poll responses. So just looking at this from a market disruption and market response perspective on the next slide, this is in many ways similar, but in other ways vastly different than prior disruptions, right? So from a supply chain perspective, we'll start there. Oftentimes, the root causes of any significant supply chain disruption can be different, but the market response is quite similar. So what we are seeing is that in the shipping and freight and supply chain universe, after COVID, most of the major shipping companies had already rationalized their fleet size and learned a lot about alternative routings, developing their own sort of rationalization of either port additions or port stoppages. And so what companies have to do in the current climate is just sort of evaluate where their exposure is and adjust their methods of shipping accordingly. We're not seeing a ton yet of reshoring or resourcing. We are seeing a lot of changes to mode, though. So far more drastic and significant disruptions in air freight. Those prices went up immediately, largely due to fuel surcharges, but also due to hub location. Now we are starting to see essentially spot rates for shipping starting to climb, but long-term supply chain costs on the shipping side, really not. It's mostly fuel surcharges. So logistics managers moving away from air freight. It's a cost versus speed issue. Shipping companies optimizing their routes, but obviously at a cost of efficiency. With that said, though, some sectors are more materially impacted by the current disruption. Pharmaceuticals, from an API perspective, are seeing significant disruption. Obviously, and this is sort of the waterfall effect. All of these other costs we've talked about. Energy terminals are at capacity due to the closure of the strait. And some specific resource cost increases are due to infrastructure damage like helium, which is necessary for a lot of chip manufacturing. So we're seeing the semiconductor industry, chip industry, everyone sort of adapting to this. Retail, not as materially affected so far. But again, as companies look to evaluate routing, that too may change. But for right now, we're not looking at a long-term supply chain set of changes. It's a lot of near-term evaluation of alternatives. So that's the things that are similar. Looks a lot in many respects from a cost perspective like COVID. But let's talk about the differences, because I think this is where, from a general counsel and legal team perspective, adaptability becomes more important. So on the next slide, one of the big differences is kind of the overall geopolitical dynamics here and some of the uncertainty created by unilateral action from the U.S. So the U.S. response thus far has been more unilateral, but it's also come with a kind of different approach to sanctions and regulatory issues than one might ordinarily expect in a conflict situation. So unlike Ukraine, for example, in this context, we're actually seeing some relief for Iran crude shipments. We're seeing relief for Russian crude shipments to try to mitigate the impacts of energy costs. And that limited coordination, again, at least at the top level, means that there's a little more dynamism in the current climate. The longer term impact of extended closure of the Strait of Hormuz is also a difference here that is worth mentioning. At this point, not something that is being anticipated or planned for from a commercial and business perspective, but nevertheless, as folks are looking, 6-12 months out, that concept of evaluating supply chain alternatives, even if they're not quite making the decision to make a move right yet, is something that needs to be factored in, especially with the potential for persistently high energy costs. And then the last piece of the current situation that is, I think, a bit different is that it is not a one-off scenario. There's been a significant amount of already meaningful trade disruption over the last 15 months. So we've already had sort of the impacts of a significant tariff shock, tariff disruption. We've already seen kind of a greater decoupling between China and the US in terms of their both regulatory and trade climate. And we're seeing in that environment, China imposing a significant amount of new controls with respect to overseas direct investment, industrial supply chain and security regulations. And so all of these things are factoring into the thought process. So from a takeaway perspective, right, a lot of this from a legal team is ensuring that you've got line of sight into the overall supply chain picture and developing sort of that short range, medium range, long range plan with respect to alternatives. Some of the other things to kind of take away that my colleagues will talk about is evaluating sort of contractual and finance perspectives. But from a pure regulatory perspective, I think that we largely know the universe as it is today in terms of the issues to look for. It's trade and tariffs, it's potential sanctions and related changes there. So because of that dynamic environment, those are the two I would focus most closely on from a trade perspective.
Thanks, Mike. That's perfect. Now, sort of moving to a more regional focus now, we're going to move to Dean and Steve, who are going to give a regional perspective from our Middle East offices. So, Dean, over to you.
Thank you, Dan. So turning to the situation on the ground. So we have about 200 people spread across 9 offices at least. And for those of you who have been reading, a lot of alarming news and headlines, I should just start by reassuring everybody that all of our people are safe and well, and as are all of the very many clients and contacts we've been reaching out to over the last couple of months. And there is now very much a sense, I think, on the ground of life and business going back to normal, albeit in the shadow of a huge amount of continuing uncertainty. And I think that's really been reinforced in Dubai by the schools going back to in-person learning. And I can't tell you how important and how much of a milestone that has been for so many people here. But with that context, I want to just start by going back sort of 8 or 9 weeks and looking at what General Counsel's sort of immediate response and priorities were when the situation first developed. And obviously that differs between different companies, but I think there are a couple of clear sort of consistent things that we saw all General Counsel focusing on. And the first one is non-legal, but that was, again, unsurprisingly, an immediate and urgent focus on the safety and well-being of their teams and of their people. And that required assessing and evaluating a huge amount of, at the time, very contradictory information, making a lot of decisions, implementing policies, and a huge amount of contingency planning, and then communicating that to their teams, and also having that individual engagement to understand their particular circumstances. And I think it's important to mention that because it's very easy to underestimate how difficult that was for a lot of General Counsel and how important it was. And it was difficult because there's a huge amount of response that comes with that. There was also an enormous time commitment that involved, and dealing with quite sensitive conversations with people who were being impacted in all sorts of different ways. But as I said, it was also, I think, extremely important because what we really saw is that leadership and that support from those General Counsel really gave a sort of comfort and stability to their legal teams that enabled them to really focus on delivering what they needed to the business and responding to those demands with that comfort and stability that came from that. So that was the first sort of immediate response we saw. The second response we saw was obviously General Counsel looking at those key contracts, assessing how they have been impacted by the general disruption and in particular some of that trade disruption, and looking at what steps needed to be taken to immediately preserve those positions. And what we saw was a huge number of force majeure notices being delivered and a lot of discussion around force majeure in the market. But actually, for the vast majority of those contracts, when you actually analyze them in more detail, it became apparent that in many cases, neither the contractual risk allocation nor the statutory provisions under local law were actually applicable at all in some cases, particularly where the disruption came from trade disruption outside of the jurisdiction in which the contract was being performed. And even where it was applicable, often it only provided very limited relief. And so what we then saw is, I think, General Counsel and legal teams more generally sort of taking it a step back further and really looking at those contracts and those projects in a far more holistic way, and having to look through the full range of remedies and reliefs and provisions in those contracts. And I think Louisa will talk about some of those later, in order to really come up with a sort of clear position of the overall options available to the business to manage those risks. So that's the two things we saw in terms of immediate response. Steve, I'll pass over to you to talk about where we are now and particularly what you're seeing from a financing perspective.
Thanks, Dean. Well, where I am now is currently in the UAE. It's a place I've called home for over 18 years. And I think it's fair to say that some of the international headlines or press articles you've seen hasn't really reflected the reality of life on the ground here. I think the UAE leadership's response to the whole crisis has been exceptional. And that's really sort of helped to give some level of confidence to regional markets. It's worth also just going back a little bit and just putting this into perspective from a trade perspective. The GCC has been on a diversification route agenda for some time now. Things like the Dolphin pipeline from Qatar to Oman, the East Coast West pipeline in Saudi have all helped avoid the Straits of Hormuz for delivery of oil and gas and related products. Equally, the Etihad Rail project in the UAE allows goods to get to port in Fujairah rather than going through the Straits of Hormuz, and was all helping to mitigate some of the trade risks that we would see. We expect to see more. We're really pleased to have supported on the Hafid Rail project, which is a link to the UAE into Oman Port of Sohar. And that's this week stated to be 40% complete in construction. So more types of projects like that. But coming back to sort of the economic and the financial markets, the immediate response was for the public debt capital markets to close. We saw a lot of clients going to the loan markets where there was a bit more liquidity, pricing was a bit more certain, and we could also have a shorter tenor debt, which really helps sort of help banks with issuers with liquidity and their cash position. So we've seen a number of bridge to bond facilities just to bridge that gap between bonds maturing and capital needs. We're working with one issuer at the moment who's got 5 bilateral facilities, just giving that sort of optionality and flexibility around its funding sources. We've also immediately on sort of the crisis starting, we helped one borrower borrow 5 bilateral facilities in one day. So that need for cash and liquidity was super important. And more recently, we've been really pleased to support Aldar and their 5 billion dirham dual trans facility, which closed on time and similar pricing to what they're expecting. So that just gives confidence to the market, especially on that transaction where it was a mixture of 10 local and international banks, really showing the commitment to the region from both internationally and locally. Moving on, we're seeing the debt capital markets reopen. Actually, the sort of normal approach here, the normal expectation after an issue like this would be that a supranational would issue first and then a regular issuer who would come to market, and that would help set the benchmark for pricing and the adjustment that one would expect on the coupon for the debt capital markets. Really pleasing to see this week Emirates NBD issue its Tier 1 notes. And the other important thing on that is that it appears that the differential in pricing was only 12.5 bips from its pre-crisis debt, last issuance of that debt. So that, as well as giving confidence to the market around liquidity in the the regional debt markets coming back to being open again. And then the other part is the response from the government and policy. So from a policy perspective, so the UAE Central Bank here has had the financial resilience package of 1 trillion dirhams. That's about $275 billion. That was centered around 5 pillars, and one such pillar, just to pick one, was the loan deferral part of the package, and that allowed banks to basically defer maturing debt that wasn't paid by 3 months, giving that window of flexibility for companies to go and look at where the problems are, whether it's in the supply chain or their revenue or their cost base, and take action. So that 3-month window, probably got another month and a half left. We'll see where we are in a month and a half time as to what the true picture as it will emerge. So that's where we are on from a financing perspective. But then we were talking beforehand around, with every crisis comes an opportunity, and one of those opportunities is to the lessons learned and build on them. So what are you seeing that GCs are seeing from a lessons learned perspective?
Thanks, Steve. So I think when we've been obviously discussing a lot of the lessons learned over the recent weeks, and I think we sort of categorize them into cultural, operational, and commercial. And I think when you're looking at an unprecedented situation like this, it's impossible for anyone to have planned for it. It's evolving so quickly and it's so dynamic. And I think it's really highlighted the importance of the cultural, the culture both of a legal team and of the wider organization. Because, as I mentioned before, legal teams have been faced with making extremely difficult legal decisions on, balancing competing, multifaceted risks that are often very difficult or impossible to quantify, and also working in an environment where they have incomplete and often contradictory information. And I think what we really saw is the legal teams and the general counsel that were able to respond most effectively were those that were working in a culture of openness and transparency, where they were able to quickly go out to all of the relevant people within their organizations, get their input from the different business units, different perspectives, to be able to make those decisions with as much information as possible. And then where you have that culture of trust and empowerment is also enabling those general counsel to make those difficult decisions, knowing that there is a chance that that decision may turn out not to be right with further information, but they're being empowered and they have that confidence to make those difficult decisions. And then finally, having a culture of sort of genuine collaboration and integration across the organization means that once those decisions are made, the people who are actually required to implement them can work together to develop solutions and overcome all of the hurdles that they'll be faced in implementing them, and make sure they're actually able to deliver that, again, often under huge amount of time pressure and in a very dynamic situation. So I think those are the key lessons learned from a culture perspective. Steve, what are your thoughts from an operational perspective?
Thanks, Steve. Operationally, I think obviously we've been through a disruption most recently with COVID. It's not that far behind us. We hope we wouldn't be there again, but that disruption is here. But there are a lot of lessons learned during COVID. Those plans that people put in place from an operational perspective have been dusted off and adjusted. So whether that's things like working from home, working remotely, homeschooling, and then things like electronic signing, building resilience onto that sort of operational platform that needed to be for contract execution. In some cases, some things were lessons learned was on the working from home. Some companies have decided to give flexibility on that. Others have decided that actually they would mandate back to office working more quickly. So again, that sort of operational decision and lessons learned from COVID has been put into action. From a business perspective, you've mentioned already around sort of having a perfectly well drafted legal clause, but it won't deal with exact commercial positions. So that sort of the operational flexibility has been super important. Things like having a contract or a claims register, those are things that I think people have learned during COVID and put them into place during the current crisis. So lessons learned there. And then in the supply chain, I think getting onto some of the third pillar on the commercial side, looking at your operational supply chain. So whether it's how long you've got to terminate contracts, how many alternative providers are there, do you need to have an interest in the supply chain in order to diversify? So that's sort of building resilience into the supply chain, and then also on resilience, that sort of operational cash position, having the cash available to be able to make decisions rather than decisions being made for you. So we've seen, as I said, a lot of on the banking side, a lot of clients looking for facilities to get extra cash, and that's not out of an urgency or sort of panic position. That's from a strategic position of strength, effectively, and being able to borrow when they've got a good cash position is the best time to be able to borrow. So that's on the operational side. But basically, in the message here is have that backup plan, that operational flexibility to build resilience in. And Dean, you're going to pick up on the third pillar.
Yeah, so in terms of the commercial aspects as well, and the lessons learned there, I mean, I talked a little bit before about having that holistic understanding of the rights and obligations and risks from a legal point of view, and that is obviously important. But what we have also seen in a number of discussions with General Counsel is actually when they've sort of played through what will happen, they've realised that if legal rights were strictly enforced upon counterparties and right through the supply chain, often that was going to put parties in a position that was either commercially or technically just not feasible, and potentially leading to failure of some of those companies in the supply chain. That could have obviously very adverse effects for the particular project or transaction, but in some cases actually wider adverse effects because they are relied upon for other relationships. And so I think what we've seen is General Counsel really having to step back even further, look at the wider picture of these projects, not just their own contractual relationships, and really try to map out those points of fragility and take a sort of far more creative approach in terms of looking at how you could restructure these projects in a holistic way in order to protect their position, both legally, but also to ensure the success of the overall project. And I think that also ties into a theme that we've seen emerging in recent times in the Middle East on contract negotiation, where historically there's been a sort of a default to a very aggressive risk allocation from a number of parties. And we've been having a number of discussions about looking at that more sustainable, bigger picture and just reevaluating that risk allocation. So I think that's something that we may see gain some further traction going forward. So I think to sort of sum that up from a Middle East on the ground perspective, I think what the lessons we've really taken away from this is to really take the time now to really analyse and invest in those cultural, operational and commercial capability, because it really will be important when faced with a disruption.
Dean, Steve, that was fantastic. And I think the content you've provided there, I think, to be honest with you, you could only be giving from a position on the ground there and what you've seen. So thank you very much for your insights. Now, before we move on to the contractual element, Niamh, I think we're going to launch the next couple of polls to get some input from our audience.
We're back to everyone for some more input. So we have two questions for you this time. You should now see the poll on your screen. The first question is all around contractual protection that Steve touched on just now. And the second question is more focused on your approach to counterparties at this point in time. So in terms of, let's start with question one. So how confident are you in your organization's contractual protection against current disruption? Would you say that you're very confident that the protections that you have in place are robust? Would you say that you're moderately confident and you do and have identified some gaps? Would you say more that you're feeling it's limited confidence and there are some significant exposures? Or perhaps you're still reviewing? perhaps it's still under review from your perspective. And next up then, we're going to look at approach to key counterparties at this point in time. Would you say that the approach that you're taking is to proactively engage, perhaps even renegotiating? It might be to monitor, but not yet to engage. Or it could be, due to your circumstances, taking a more defensive or enforcement position, or perhaps even it's too early to take any action. Okay, so it's excellent to see everybody getting involved. I am going to push everyone a little bit more. We like to get a more robust view from the lion's share of the audience. So we're just approaching the 50% mark, but we are going to leave just a little time for everyone to give us their view and their sense of this. Obviously, results are going to be useful for you to see how everyone else is also approaching these two different aspects of contracts. So let's do 5, 4, 3, 2, 1 on this one. Excellent. Still some votes coming in. As we're done, we're going to end the poll. I know Louisa is going to be keen to see the results of this one and share the results with you all now. Okay, so let's have a look. So in terms of the first question and the level of confidence, so Louisa, moderately confident is what we're seeing here, with some gaps identified. So thank you for your honest and candid views on this particular one. That's from 60% of the audience. And then when we go to counterparties, a little split. So 50% monitoring but not yet engaging, and then, which is great to see, obviously a 37% proactively engaging and renegotiating is really the view from the audience. So I'm going to hand back down to you and Louisa to lead us into the contracts piece.
Thank you, Niamh. And well, Louisa, I think you've got plenty to go out there, so over to you.
Thank you. I thought that was really interesting. And I think in particular that response to the second question, it sort of matches with what Dan and Steve are seeing on the ground, and also with what we'd expect. We don't usually see sort of parties rushing, headlong into disputes at this particular stage. It's a wait and see approach, which can be sensible, especially while a situation is still changing daily, weekly. But you also want to be prepared and fully understand your risks. And, no doubt you and your legal teams are being asked questions by the business about what you have in your toolbox. So it's really important to sort of do that groundwork now and make sure you haven't missed taking an action that might best prepare you and the business for the future. So really happy to see that everybody's, or most people are sort of proactively engaging. So just moving to the first slide, we've already heard from Dean and Steve about what they're seeing on the ground and what they're hearing from GCs that they're talking to. And we know from experience that situations that give rise to uncertainty and to change also lead to contractual stress. We've seen that with COVID, the Ukraine war, Gaza, US tariffs. All of these events have put pressure on commercial contracts in different ways. The contracts that are most impacted can often be the ones that were under stress already. So, for example, where there was already some underperformance, or where the economics were bad for one party. Increasing cost pressure from, energy costs rising, or pressure to deliver in difficult circumstances can turn what was simply a bad bargain into an unsustainable contract. But sometimes the stress is entirely as a result of the situation. The goods just can't be delivered, the works can't continue, or pressure down the supply chain means payments stop, or there are drops in service or delays in performance. Now, whether the stress was already existing or it's come as a result of current events, parties may be looking to extract themselves from the contract or from their obligations under the contract. Or a party may use the situation as an opportunity to renegotiate what were unhelpful terms. And in some cases, it's not until a situation occurs and that you have that sort of contractual stress and you have the focus on certain contractual terms that you realise that some of the provisions just aren't clear enough, or simply don't work in practice in the way the business had expected to when the pressure was on. So we're going to turn now to the next slide and the key provisions that you and your legal teams need to have an eye on. I'm going to look at non-performance first and force majeure. Dean's already mentioned that they've had lots of activity with people asking about this. So force majeure, it's where it's being claimed that the contract just can't be performed. Now that may in fact be the case, but we also often see force majeure asserted when it's just difficult to perform the contract rather than impossible. So a very quick reminder of what force majeure is. So where it applies, it allows a suspension of contractual obligations if a party's been prevented from performing the contract by certain events. And the suspension means the parties are protected from claims of liability for breach for the non-performance. So what that means is you can't bring a claim, or you can't have a claim brought against you, for example, for failure to supply, failure to meet minimum order provisions, or failure to meet key timelines. And given those consequences, it's very important to understand when it does and doesn't apply. The force majeure claims are always very fact sensitive. There are also usually questions over whether the event caused the stop or the pause in the performance, or whether something else was actually the cause. You need to look really carefully at the relevant force majeure clauses and also consider which country's laws apply to that contract. But a couple of things to focus on regardless of the jurisdiction that applies. There's usually a list of events. You need to look at that, what's actually covered by the force majeure clause. And then look at the notice provisions and the other auxiliary terms that are included. Sort of what notice do you need to give? What else do you need to do to make sure you protected your rights? This is often where we see counterparties fall down and lose leverage for discussions later on. A couple of things to note that apply just generally. A change in economic circumstances won't generally fall under force majeure. And then the burden of proof is usually on the party who's seeking to rely on force majeure. I'm going to quickly mention frustration. This is a common law provision that sits outside of the contract, and it's available in some jurisdictions like UK, US, Australia. So what actually is it? Well, it applies to discharge the contract or the obligations and liability under the contract where the contract has just become physically or commercially impossible to fulfill. And it's not the it's not the fault of either party. There are a few other hurdles you need to get over to show frustration, and I've rarely used it successfully in practice, but it's certainly worth considering where you don't have a force majeure provision built in. So on the slide, I've also listed the key provisions you need to be looking at when the contract isn't being performed well. So it's really important to know what level of service is written into the contract, and then what rights do you have where the performance just isn't up to scratch? Do you have step-in rights? I mean, these are pretty extreme and I've rarely seen them used in practice, but they're certainly good for exerting leverage in commercial discussions. When can you terminate? And what groundwork do you need to do in order to sort of do so correctly and avoid being sued for wrongful termination? And whilst you may not actually want to terminate, you want to understand what your termination rights are, as again, they could be good leverage in your commercial discussions. Can you terminate as of right, or only for material breach or some other specific circumstances? What counts as material breach? Often contracts also provide escalation levels and timeframes for inter-party discussions when things have started to go wrong. It's important you follow these, as where you don't, it may delay you taking firmer action at a later stage, such as initiating arbitration proceedings, if you haven't quite followed the correct process. Finally, I'm going to end on some practical tips on the last slide. It's really important that as GCs, you and the business are deciding what your end game is. What do you and the business ideally want to happen? Do you just want to return to good performance, have a reset with the existing counterparty? Are you willing to put up with some bad performance for now or some slow payment as you're playing a longer game? There may be restructuring or other opportunities that will come out of an ever-changing situation. You might want to change your counterparty and go through the procurement process all over again. Or you may just want to keep the relationship, but with amendments to the contract to better protect you from turbulence in the future. What that means is that you need to have a plan A, but you'll also need to have a plan B, C, D, because you won't always be able to control what the other party does. And it's really important to do that planning because the business will be reassured if legal has a plan for different scenarios, and they'll be much less jumpy and nervous with you when something happens that you've already got an agreed strategy for. On a matter I dealt with recently, we had a consideration of a change of distributor across different jurisdictions. There's a huge amount of scenario planning involved. You know, do we stick with the current distributor? Do we change some terms, remove exclusivity? Do we move to a brand new distributor? Do we just extend the time period of the contract? But the preparation we did working with the GC and working with the business was key to a smooth execution. But don't decide on your end game before you properly understand what your position is. That old adage, measure twice, cut once. So do you actually have a right to terminate? Does the force majeure clause apply? You need to dig out the contract. Easier said than done, I know, but you also need to make sure that you've looked at all of the schedules, the variations, the side letters, so you've got a really full picture of what the contractual terms are. Has there been any correspondence on breach or non-performance to date? Speak to the commercial team on the ground. What are they seeing and hearing? And work out which of those issues you need to investigate further or where you need external legal advice. For example, on the termination clause or the dispute resolution clauses. It's all about understanding what the business's risks are. So that's your internal position, your strategy. But you also need to plan what your external position will be. Even where things are pretty testy and temperatures are raised between parties, it's still helpful to have a clear line of communications with the counterparty. Decide who's going to lead on those communications. Are they clear what they can and can't say? Will they run draft emails by you? Will you prepare scripts for them? And it's often helpful to have separate lines of communication, so a business to business line and a lawyer to lawyer line, because that allows the business to say, well, our legal team has to say that to protect our rights, but we still want to have a commercial dialogue with you. In some jurisdictions, it's helpful to have the business to business communications on a without prejudice basis. And as a reminder, that's where the content of conversations that are without prejudice can't be produced as evidence in later proceedings. But even where the communications are without prejudice, it's still important to advise the business on what to say, what not to say. Although any admissions can't be used, they will give another side, the other side an insight into your weaknesses and might impact the position they take in future commercial discussions. Finally, I just wanted to say that a managed solution will be much better than a contested termination or a contested claim for damages. I know it feels odd for a litigator to say that, but we'd much rather help you resolve the issue and allow you to get on with your business. And as noted earlier, there may be a bigger prize available in the future or other good reasons to maintain the relationship beyond the contract that is currently under stress. Future construction, new countries opening up, other new opportunities. And on that note, I'll hand over back to Dan for the discussions and questions.
Thank you very much, Louisa. And before we move on to the next session, I just wanted to bring together those themes that Mike, Dean, Steve, and Louisa have talked about, because like we said right at the start of this session, we want you to go away with as clear key takeaways as you possibly can. And I think the way Mike opened up, and as a fellow trade lawyer as well, I can emphasize that having line of sight of the supply chain in the medium term, in terms of what the likely consequences are across your supply chain, where the pinch points are, where the security of supply is hit, is absolutely critical, because that's where you'll see the static trade regulatory framework really hitting, is those pinch points and your inability to supply or continue supplying. That's where we've seen that hit, whether that be in COVID, whether that be with the Russia crisis, or even now. And moving on to Dean and Steve's point, and it's like I said, with the concluding remarks of their session, having a unique insight on what the position is on the ground and understanding those cultural and operational aspects which are unique to a particular region, and actually taking the time to invest, notwithstanding the fact that you may be a matrix global organization, but ensuring that you have those cultural nuances properly affected within your organization is critical. And finally, with Louisa, I think understanding the proper law, both in terms of internal, your understanding your contracts, where you are there, and also external and your counterparties, managing that proactively, ensuring that you have multiple communication channels, so actually that you can continue to doing business, notwithstanding the legal risks that pop up as these situations arise. So bringing all this together, we're going to spend the last few minutes just walking through some interesting topics that have come through. And Mike, I might bring you back in on this, and sort of whether it be COVID, whether it be the Russia situation, whether it be now, what have you seen GC and legal teams? What have the good ones typically seen? What are the good behaviors, and perhaps in juxtaposing against that, what have you seen sort of the lessons learned?
So I'll give you two, and they're both sort of operational, practical, but also human. So the first one is to be inquisitive, right? Because presumptively you're going to need more information from a lot of different parts of the business. So part one is to be inquisitive about the business teams, and also be inquisitive to all of the resourcing you have externally. There's a lot of resources out there within your trade groups, within your outside counsel teams who have perspectives on this. And so learning and being inquisitive, I'd say, would be one. And then the human side of this is have some grace for those around you, especially your trade compliance team, your logistics teams. Those folks have been dealing with pretty much constant disruption for the better part of a year and a half. And so in that conversation, right, understanding that data collection has been a challenge, response times have been a challenge, and appreciating that for those folks, they're more likely to be engaging with you and responding to you if you're leaning in from the perspective of being a resource, right? To Dan, your question, and Louisa, your point about the commercial side of this, I think it's really important that the compliance teams, the logistics teams, the business teams know that if they tell you they can't do something, that is not going to be immediately held against them. It's actually an important fact in negotiating a resolution if that's where you're trying to get to. So those are kind of the two key takeaways, I think, really differentiate strong internal legal teams from those who may struggle.
No, that's a very good point. And I think one of the elements, I think certainly I would say as a general theme, because there's this function of permacrises now, general counsel teams and legal teams, I think, are just genuinely becoming more robust. I think when we first started seeing this wave of situations arise, the companies that were used to dealing in, let's say, high-risk jurisdictions or in particularly sensitive sectors saw this very much more as business as usual, and sort of had the roadmaps and the play tools to wrap that out. But we're now seeing that, at least in my own experience, seeing most companies now have a comms strategy toolkit, or whether it be really understanding where they are within their contracts. That's becoming much more of a market standard across the board. I don't know whether you'd agree with that.
If that's to me, I'd have to agree. I mean, and not just robust, but sort of differently tooled, right? Identifying tools that create efficiency, identifying different types of analytical resources than just, how historically in-house legal operations have been built. So they're very good at disputes, very good at contractual management. These types of dynamics are very, very different. And I think that requires kind of a different type of tooling and a different type of approach than just traditionally like how lawyers are trained, right? So that's another piece of it. It's robust, but it's also not just resourcing and volume. It's also the tools that are being put into place to make some of that easier.
Yeah, no, absolutely. And look, Steve, legal teams in these situations, they have to manage up, they have to manage down, they have to manage left and right. what have you seen in particular in the Middle East, the kind of questions that the C-suite have been asked of legal teams?
And I think touching on the sort of point that Dean raised, I think the immediate one was the companies have been flooded with force majeure claims and notices, and the business doesn't know what to do with them. So being able to have a strategic response to that, collating them, analysing them, tracking them. So I think taking control of that part of the disruption and putting some sort of order and clarity around it. So that's definitely number one. We're in an environment where legal fees, GCs are being asked to control legal costs, both internal and external. That hasn't gone away. That's always been there. But actually it's being looked at now with greater rigor, and sort of seeing GCs having to re-examine and look at those cost base again. Interestingly, on the transaction, the sort of whether it's a project, it's an acquisition, it's an M&A deal, it's a contract, some GCs are getting asked different approaches depending on different organizations, but some GCs are being asked to accelerate things that are need to get done because they're important priorities. Others are being asked to put an optional or sort of less important, less urgent deals onto a slightly slower track. Again, trying to manage costs, trying to manage exposure, and sort of helping GCs with that. And then the other one, I think sort of the other category that they're being asked is, especially when it comes around financing, is that's got to get closed with this cash to be in our bank account, not somebody else's. So trying to lock in those contracts and get deals closed, especially ones that are very close, because nobody wants to sort of renegotiate or spend months looking at new contractual terms.
No, that makes sense. And look, Dean, bringing you in here, asking you a subtly different question but related. If Steve answered the question, what questions are being asked? What decisions are we seeing legal teams take right now?
So at the risk of being accused of seeing the world through a dispute lawyer's lens, I think that the first one that we're seeing a lot is obviously there's a huge focus on cash flow, and I think businesses are looking at what are their potential sources of cash. And what we've seen is I think there's been a lot of claims that have not been pursued historically for various reasons, and I think some of that comes back to Louisa's point about wanting to preserve relationships and opportunities in the future. But now in some cases that consideration is changing, and businesses are wanting to really focus on pursuing those claims where they can. And equally to Louisa's point about contracts or relationships that were already under stress. So there have been sort of disputes that have been teetering. And I think the decisions that we're seeing a lot of legal counsel being asked to make is, firstly, is this claim a reliable, is this a successful claim? Can we be confident that if we commence this claim, it is going to result in a significant cash inflow, particularly in circumstances where, as Steve said, there's a lot of pressure on legal costs. So people have to be quite focused in terms of what they want to pursue. And then related to that, where they are seen to be good claims, there is a decision as to do they commence formal proceedings, because that's often seen as the way to put pressure on, the way to get things moving. But at the same time, that is quite long. And so that means that cash is not going to come for potentially a couple of years' time. So there's a decision, do you commence formal proceedings, or do you try to negotiate and get perhaps a lower amount, but more immediately?
No, that makes sense. That makes sense. And Louisa, bringing you into this, so obviously we're at the stage where the discussions are ongoing, and there's an element, certainly if the poll is anything to go by, of wait and see how things play out. Getting your crystal ball out, do you see a point looking ahead where the risk may crystallize and what those factors might be that might lead to a decision to actually press the red button?
Yeah, and just picking up on Dean's point there, you will have those contracts where there was already an issue, there was already a problem, and it's been put to one side. So it's when those things start coming to a head, it's almost this is one extra problem that you just can't ignore anymore. And as we said, those relationships where there was already some underlying issues, Because where there is already a good relationship, it's much more likely to resolve itself through discussions. But I think the pinch points are going to come from two areas. First, from the contract, and then from external factors. So from the contract, it may be, when the contract's up for renewal, when there's a key payment date, especially a pretty large payment date, when there's a key delivery date. And it's those sorts of things that will really be the pinch points. And then from an external piece, it's those geopolitical changes. I'm definitely not going to get my crystal ball out and say what will happen in the world in the next 12 months. None of us could have predicted where we've been in the last 5 years. But I think, as we've seen from what has happened, it's when something major happens on the geopolitical scene that it does cause that impact. But just going back to the sort of practical tips I talked about, that's where those two really important things are. Make sure you know your contracts, you know the contractual documents, and that you've done your scenario planning.
Thank you. And one final question, I'll direct this to you, Mike. So what are the icebergs out there for general counsel, for legal teams? What are we not pricing in, or what are we underestimating that might be coming up in the future that perhaps we just haven't seen to date, even being discussed?
I think that the biggest mispriced risk right now is the length of time it's taking to resolve virtually anything, right? So, we see a lot of headlines around tariff refunds, for example. Right now, 37% of claims have been filed for a refund, and they're expecting to issue 10% of those refunds within the next month. So just for articulating like timelines, resolving business disputes in this environment, getting resolution or certainty from regulators in this environment, everything takes a bit longer. And so I think that to me, I think is the biggest challenge, is that, the business and a lot of the sort of commercial side of this wants to have certainty, have resolution quickly, but the mechanisms that actually develop and implement that resolution are taking longer. So again, sort of that not to be overly patient or wait and see, but know that you may have to evaluate more than one avenue to achieve the desired result, and you should probably be pursuing them in parallel, because the straightest path, the most obvious open door, may actually be the longest hallway. So I think that's the biggest challenge that we're seeing right now in terms of being able to price uncertainty.
No, that makes perfect sense. And look, I think we've got one question that's come through, which, Dean, I think has got your name written all over it, in relation to the extent a legal professional should be aware of technical terms and business terms to understand and review documents properly. Do you want to take that within 30 seconds?
Yeah, sure. So I think it's a very good question. I think the short answer is it is very important for legal professionals to have at least a base understanding of those technical terms and that business thing, because without that, you can't fully understand what is intended by the transaction. And I think we see a huge number of disputes arising actually from an inconsistency. We've got very well drafted legal terms, but actually you go into the commercial and technical terms that are often far, far more important, and they don't match up properly with the legal teams, and they haven't had that legal review. So I think it is very important to have that level of understanding.
Fantastic. Well, look, I'm conscious of time, and we want to finish on the nose. So I want to say a huge thank you to everybody here today to take the time to join us. I'd also like in particular to thank Louisa, Dean, Steve, and Mike for leading us through the session. And before we close, I want to share the link to our website hub, where you can find all our trade disruption support materials in one place. That's also coupled with some excellent sectoral insights that will be coming out in relation to managing particular issues over the next few weeks. As always, we would love to hear your feedback on today's session, so please feel free to drop us an email at cxprogram@dentons.com. Finally, you can also request a copy of the slides from today's session by sending an email to the same address. With that being said, I wish you all a great rest of the day and see you soon. Thank you very much.